Welcome to Crypto Simulation Theory. I'm the Gaussian Snake. Tonight I want to follow up on a video I did on a pump and dump scenario for Bitcoin that I consider to be quite likely, but I want to talk about a different way that it could play out than the way I initially presented it in my first video. I'm actually thinking that this other way is potentially more likely than the one that I presented, but we're not here to be fortune tellers as analysts. It's not my job. You know that I can't predict exactly what's going to happen. If I could, then there would be no need to follow me because everybody would be able to do it. It'd be that easy. So this is a notoriously difficult market to make forecasts in, but I think it is, the reason behind these forecasts is mainly just so you can, kind of help prepare yourself for potential outcomes. And sometimes you need someone like me to kind of give you an idea of what we're seeing so that you can make your own judgment call and decide who you want to believe, if you want to believe anybody, and what you want to do about it. So I'm going to show you kind of another pump and dump situation I can actually consider to be quite likely to happen. And I think it could take a little bit longer to materialize than we might expect, but it still would be. Let me just go over my old situation with you that I talked about in my last pump and dump video. So if you haven't seen that one, you can at least kind of be familiar with what I said in there. So what I basically predicted in my last video was that we would come down into this red zone here, probably hit like around 49K, and then pump out to this green zone kind of by, maybe early 2025, hit around 100K, have some trouble, and come down and actually have a hard landing sometime in, I think, May is when I said it might happen, like around May, and then a nice bounce out of that and an extended sort of bull market that could go into 2026 potentially and take us to heights of around 200K or something. So actually go above this green zone here. So that is a scenario that I came up with in my last video, something kind of like that. So what you have is you have a dump, then you have a pump, and then you have a hard landing, and then you kind of pump your way out of that hard landing. Not an unreasonable theory. It could play out, and it's been my base case. But I wanted to talk about something else that could happen that I feel has an equal likelihood of happening. Maybe not more likely, but just an equal likelihood of happening. Now keep in mind, coming down into the 25 to 32K price zone is a dangerous zone to be in, but stock market has dropped 50% on hard landings time and time again. So I don't think Bitcoin gets away with anything, less than a 60-70% drop if the stock market, could drop 50%. So I think a hard landing is kind of, in my mind, kind of baked in. It's just a question of when, not if. I don't think we're going to get a soft landing. I mean, I could be wrong, and then shame on me if I am wrong for not really considering it. So in my new situation, what I'm sort of thinking, I'm going to provide some justification for this, is it kind of starts out the same way, which is, we come down to like somewhere in this red zone, the dump before the pump. And this is my old red zone that I had, on the channel a long time ago that was hit a few weeks ago. And then instead of like dumping into my red zone, the bottom red zone, the hard landing bottom, when we come up here, I still think we're going to encounter some issues and have some consolidation if this situation plays out. I don't really know where the rate cut floor is, so it's really hard to know exactly how to draw this, but let's say the rate cut floor is in like July. I'm just making this up. I think we could, get maybe somewhere into this green zone, like up to like close to 180K, and maybe even close to 200K on a wick, and then I think we could have a hard landing start to materialize towards the end of the year. That I think eventually could take us to this 25 to 32K price zone sometime in 2026 as a potential bottom, from which we would then sort of find our way back to a new cycle. So this is another outcome that I consider possible and actually probable. It might not take this long to evolve, but the thing is, we don't really know how the Fed is going to cut rates. So what I'd like to do first is kind of go back to the federal funds rate prediction website, and we can look at what the CME group is thinking that the Fed is going to do. These are long-term forecasts. They're notoriously unreliable the further out you go. And then we can kind of take a look at the S&P 500 and its history and try to identify, what hard landings have looked like for the S&P following rate cuts. And I've done this before in a previous video, but I think it would be kind of important to revisit it to see if this scenario, which is still a pump and dump scenario, you have the dump before the pump, and this pump, I think this pump could take place before October, but somewhere around then, I think we're going to break out in a big way. I'm just waiting for that drop that really brings in buy volume. And, then this hard landing bottom would make sense as sort of like a bear market bottom, for crypto. I think the 25 to 30K, 32K zone, somewhere in there would make a lot of sense for a hard landing. And it may seem a little more sensible than the one that I drew before, but nonetheless, I anticipate a very nasty drop for crypto in the event of a hard landing by the stock market. So let's go to the CME Group forecast and see what they're saying. So I've been talking pretty deterministically about rate cuts on my Telegram channel, the Snake Pit, links in the video description below. And that's because we have pretty much 100% probability of rate cuts. I'm thinking I agree with the CME Group forecast that we're going to have a 25 basis point rate cut. I don't think the Fed's going to come in aggressively. And the reason for that has to do with the stock market. I'll bring that up in a minute so you can see why I think the Fed's going to be very conservative with rate cuts, at least initially. And it's going to appear like we're on track for a soft landing. In fact, it may just look like the market doesn't even react to it much at all. And I think that's actually quite a likely outcome of that first rate cut. Now, November is a little bit split. Okay, the majority, 49%, thinks a 25 basis point rate cut, and then you have sort of like the minority, which is a substantial minority, thinking 50 basis points, and you even have 9% thinking 75 basis points, which I don't think is going to happen. Then you get to December, and now the rate cuts are becoming a little more aggressive, and see, this starts to concern me a little bit, and that drawing I made, I'm not sure we can even make it as far as I put it. We're going to come back to that drawing. I was being very generous with giving this market that much time. I actually haven't looked at these in a while, so wow. The market is starting to price in some pretty, let's go back. So they think we'll be at 500 to 525 basis points in September. I agree with that. And they think 475 to 500 in November, but there's a potential to go 50 basis points, which, and then potentially 50 basis point rate cut in December, and 25 in January. We're getting down to 375 to 400 here, 350 to 375 potentially in May. We're looking at potentially that. So like a terminal rate probably sometime in May, maybe around 325 to 350, maybe 350 to 375. That seems to be where the terminal rate seems somewhere around 325 to 350, or we'll just say 325. Yeah, I think that's kind of been baked in right now. I don't think the Fed's going to cut much lower. Some people do, but I don't think they'll go below 300, and I think that's even a bit optimistic. So sometime in Q2, we could see a rate cut floor. Those are fairly aggressive cuts for that schedule. So I think like if, I would have to say that as much as I would like to believe that we could rally in this way, what I would actually think could happen if we see really aggressive cutting is we could have a blow off top actually a little bit earlier in February, and then start to just tank from there. The terminal rate, I imagine, if depending on when it's reached, right, like really hard to say, could really give Bitcoin that nosedive. Let's say potentially even in July. It's just really hard. We don't know how Bitcoin is going to react. I just don't think it's going to be like straight down, but we have to prepare for this potential possibility, and I can't really tell you exactly what would happen after that. But that would be an unprecedented drop for Bitcoin for it to happen. So you see, this is just really hard to know. Could we also get like a less impressive top? Maybe top out somewhere between these zones because interest rates are still kind of elevated, and maybe we don't see a blow off top in the 150 to 180 range. I mean, that's possible too, and that would certainly allow for a very steep fall in price. This seems ridiculous looking at it, that something like this could happen. but we need to consider a hard landing destroying our bull market. Okay, I have a scenario where it doesn't destroy our bull market, and I have a scenario where it does destroy our bull market. And so, this whatever this scenario looks like, this pump and dump basically in next year in quarter 2, roughly, seems like a reasonable time frame. If we hit a rate cut floor, then why do I think that this is actually somewhat likely to happen, that we're going to get this really big pump and then a dump afterwards? Let's go to the stock market for some context. Okay, these are the Heiken Ashi candles for the stock market. And notice that we have in the past 3 quarters, these are quarterly, so every 3 months, we've had nothing but green. Like, forget the ups and downs that the stock market has along the way. Zoom out and look at the big picture. The stock market has been printing one Heiken Ashi after another with overshadows. There's no undershadows at all. Now that could change this quarter, right? This quarter still has some life left in it. We're not in October just yet. That would be the beginning of quarter 4. But what I do notice is that the candle bodies are getting less, have less area in them with each subsequent quarter. And so I'm kind of anticipating, if I had to draw this out, and I'm not an artist by any means. I'm just going to use a brush. You can deal with my horrible art. Maybe we see quarter 4 also look strong, right? This is funny. You guys can just laugh at my drawing skills. They're horrible. It's sad too because my wife is an artist. Okay, I'm trying to center it, but it's just not happening, is it? All right, you know what? Forget it. Pretend there's an overshadow. Let's see. I'll give it one more shot. Okay, one more shot. There you go. That's so horrible. Oh my gosh, that is embarrassing. Anyways, and then maybe in quarter 1 we see one of these indecisives, okay? And then from there we could start to print the red. All right, so I was trying to kind of emulate this here. I probably should have just grabbed the bar pattern and overlaid it. And then, we could start heading down. So I think that's actually something that is quite likely and could happen with the stock market if it even gets that much momentum and doesn't go indecisive in quarter 4. So, and what makes me think that? Well, we need to look at the history of the stock market to see that. So this is just a visual of where we're at right now. The stock market is rallying into rate cuts, which is completely normal, and it does this almost all the time. But what's happened in the past when the stock market has rallied into rate cuts? Let's take a look at a few past recessions. We have the COVID drop just right over here. And you can see that even after the cuts started happening in August, September, October, the stock market kept rallying, right? It wasn't until we were getting closer to a terminal rate that the stock market dumped out. So this is an important example of what the stock market could do. Now, Bitcoin, on the other hand, it was having a bit of trouble, but it was still finding its way to do some pumping, even in 2019 and 2020. It wasn't, it did get up to 10,000 something before it had to drop to 3,000. But I do want to focus on the S&P because eventually Bitcoin and the S&P will kind of line up, and I think that they'll fall more or less at the same time. Although I think Bitcoin will fall faster and probably hit a bottom sooner. Although it's kind of like negligible as to how swift of a bottom that will be. So if we scroll back to our previous recession before that, which is the Great Financial Crisis, GFC, let's see if I can maybe compress this a little bit. Sorry, move this down. I actually want to move this up, and I want to move this one down. Okay. Apologize for my trading view skills. They leave much to be desired, I know. So this is a pump into rate cuts, right? And even after the rate cuts, the market continued to kind of go more or less somewhat sideways, but didn't start to dump until rate cuts became more aggressive. And it's only near the floor that we finally find a bottom and kind of start all over again. Okay, so we have that example from the GFC. And then here's .com. Rates were just a little bit higher. In .com, here's the rate cuts being held steady, and you can see that the market actually started to dump before rate cuts. And that's because things were just kind of broken and the Fed just kind of waited too long to start cutting. And yeah, I mean, something like this could happen. Is certainly not my base case. But once again, the more aggressive drops, where do they happen? Closer to the rate cut floor. Okay, this happened right before the rate cut floor. We just kind of had like a bit of a double bottom and we kind of retested the lows one last time and then went off into another kind of accumulation range. So near the rate cut floor, this was a very slow bleed that took place over several years, a very slow bear market. And these rate cuts didn't start off too aggressive, but then they got more and more aggressive. Let's go back to another major recession. And wow, you can see now, we're in the 80s when we have to drag this down really far. I'm not going to concern myself with the really brief recessions, but there was a rally into those rate cuts. There was a rally into this rate cut. Actually, I don't even know if that would even qualify. Yeah, I mean, this is a recession. Just not. Let's look at some of the bigger ones that happened, like in the 70s. Okay. So, kind of coming back to the Nixon recessions, let's just call out maybe this one here. You can see this is a situation actually where the market dumped into rate cuts. It was already dumping, and we were already well on our way to a recession. So, like they're raising rates and the market just was dumping. So, yeah, this is kind of an interesting situation where the rate cut cycle doesn't quite line up with the price behavior. So you can see back here, market was pumping in the 70s, and it started to roll over on rate hikes, and that resulted in a recession. Actually, the double bottom didn't occur until so you have your maximum rate hike right here, and you can see that the bleed was slow while rates were being hiked, but as soon as the rates started to be cut, that's when the bleed really accelerated. Okay, so I think we've seen this pattern with the bleed accelerating near a floor time and time again. This is the first Nixon recession. You can see rates were fairly elevated, and the market was doing a similar thing where it was kind of dumping into rates being elevated, but it was only on the cuts that the market really started to just, have some issues. Although in this case, notice that the rate of cutting doesn't seem to be that aggressive. The market actually found a bottom before the rate cut floor. So this happened back in the 70s. And here you have a soft landing situation. A lot of people think we're going to get a soft landing. And you'll notice that most of the time, the stock market looks like it's going to have a soft landing because that's just kind of how it starts off, right? And here we had rate hikes that were actually like, bear market starting while we're in a rate hike cycle, not a rate cut cycle, but a rate hike cycle. And then once we reached our peak rate hike, the market actually started to recover on cuts and did not really have much of a bottom. I mean, you can, down here is a little bit of a bottom, but you could almost think of this sort of delayed a recession from happening. This was the actual recession over here. So that's an example. And then here in the 60s, looks like June 62, we had a kind of a bleed out here. Let's try to rearrange this. So here is your rates kind of elevated at 4%. Market was dumping into cuts. Well, I wouldn't say dumping. It was kind of going sideways. Didn't really do anything exciting until we got close to a floor. And then the rates kind of went a little erratic for a while, and the market was pumping into all that until what? Until just a little bit later when rates were going up. Like right here, you could see like rates had reached sort of like another local maximum. It would be kind of the high rate for a little while. The Fed cut, and the market just went straight down. Okay. So, I mean, it's not a perfect relationship, right? It's certainly a recent relationship that rate cuts, once they get near a floor, generally cause the market to dump pretty violently. That's been a fairly recent phenomenon of the market. And these drops have been pretty brutal recently, right? So going to the 2008 GFC, 2001 dot-com, and the recession even before that. And even the 2020 COVID recession had a nasty drop. Like this was a 36% drop of the stock market, and I forget what Bitcoin's was, like 67% or something like that. So these massive drops can happen near a rate cut floor, and it almost went perfectly into a floor. So the pattern lately has been pumping, into the rate cuts, and even for some time after. That's been the pattern like for the past few recessions. That doesn't mean it has to repeat again, or that it's likely to repeat again. It's just what I think is going to happen, because we are pumping right now, and we know we're about to get a rate cut. And I think we're going to just continue to pump until these rate cuts become more aggressive, and meaning that people start to realize that our economy is in trouble, and then I think the stock market's going to head down. And it's hard to really time this, but looking at the CME Group forecasts, it seems like they're kind of predicting that we're going to probably have a hard landing sometime in quarter two of next year, of 2025. And so we could get a really strong bull market into that hard landing, and that would mark the beginning and again, we don't know how long these rate cuts are going to take, and just the CME Group seems to think the Fed's going to have it over with, but they also thought the same about rate hikes. So what if the Fed takes longer to cut rates than they are letting on? So a lot of things can happen. That's why it's really difficult to make these exact predictions. But I at least wanted to kind of go through that history so you can get some context for where I'm coming from. So once again, what will Bitcoin do when its time comes? If you go back, there's only one data point. It's COVID, and pretty much followed what the stock market did. It just had a more violent drop. So unfortunately, we have one data point to go off of, and that's literally it. Like, Bitcoin started to kind of have a slow bleed once rate cuts. So like it went parabolic into rate cuts, and then started to have a slow bleed as the rate cuts progressed. And then when they got really aggressive, Bitcoin, along with the stock market, went down, and Bitcoin went down, about 67% out. That's sort of what I said. So is it really out of the question for this to happen again, but to happen in a way that is more similar to .com? Or, with .com, man, it took like forever for the recession to like be over. It took, several years. Could we see a bear market materialize? It takes over a year to recover. And could the top for the cycle be less impressive than what we think it might be? 180 is sort of like overheated territory right now. By February of 2025, I think probably something closer to 190 would be overheated. So I don't know how to predict this. I can't tell you how high things are going to go or how low things would go after that. 190 to 32K is a pretty unreasonable drop, honestly. So my thought is that we may be limited in our upside potential because the interest rates are not coming down to zero. Bitcoin has only existed in a zero rate interest environment since its existence, right? Since its inception, it's pretty much was created out of the GFC, and you had a 0% interest rate for so long, and then you had interest rates kind of go up a little bit, but then they would come down. This is the first time we're seeing Bitcoin in an environment where interest rates are this high, and it really has stifled Bitcoin's growth. And I think it may continue to do that, and it's possible that our bull run peak may not be as impressive as we think it's going to be. Meaning, it may not even hit this green zone target. Like, I'd like to think that it will, but it may not hit that. And so it's going to be very challenging to determine when a peak is in, but I think we can certainly look at the rate cutting cycle and see how aggressively it's coming along. We don't know what Bitcoin would have done in .com. We don't know what it would have done in the GFC. We don't know what it would have done in, the Gulf War recession, for instance. We just don't know. But we have one instance where the rates were cut very drastically and Bitcoin went down along with it, and Bitcoin did essentially a very similar thing to what the stock market did, except Bitcoin started dumping first. Now, in our situation that we're in today, Bitcoin has been kind of just slowly grinding down, and we don't even have a rate cut yet. So like we've already been kind of going down, and rates have been held steady. So, my general expectation is that because the stock market is just pumping so hard, Bitcoin is going to pump hard into quarter four, and that could result in an accelerated blow off top in quarter one of next year. And that's kind of something that I'm considering as a equal possibility to my other situation, which is the pump, dump, and pump. What if it's just a pump and a dump straight into a bear market? And what if that dump takes longer than what this dump could take longer than a year to happen. Okay, it could take till sometime in 2026 and frustrate a lot of people. And if it takes place over like a really long time zone, a long time period, it could maybe, I don't know if October is reasonable. That's probably way too far out. It's really hard to guess, right? Like I have no idea. Maybe it is in October, November. Who knows? You can draw any fractal you want, and it looks good until it doesn't, right? But like, what if the rate cuts just don't come down as aggressively as we think they're going to, and maybe the Fed holds them steady at times? That could eventually break our market, break the stock market, and put the Fed in a really tricky situation where they have, no choice but to get more aggressive with the rate cuts. And, who knows when that bottom is going to come? Like, I simply cannot tell you. But this is something that we just have to prepare ourselves for, is a very hard landing. Let's say Bitcoin did get to 100 and let's say $130,000 and then drop to 32,000. What kind of drop would that be for a bear market for Bitcoin? That's a 75% drop. I think that's reasonable, honestly. I do. I think coming down from like 180 or so to 32 is a little too much. But I think a 75% drop in a recessionary bear market, a hard landing, the worst possible situation, is reasonable. So this is something we should prepare for. And so what's like the point of this video then? Like why are we talking about this? Well, I think it makes sense to sort of like have some scenarios in your head of what you would do if the market cycle were to end a little bit earlier than, maybe the end of 2025, like other market cycles have done where they've ended usually at the end of the year. Well, what if it ends in quarter two and that's it because of a hard landing that's materializing? Or the market's just kind of slowly grinding down, maybe the stock market starts to show a lot of weakness and Bitcoin shows weakness too and just kind of grinds down for a little while and then it starts to accelerate, with some dead cats along the way. It might be the bear market that nobody saw coming, right? Just when everything seems like it's going so well, too. That's why I'm like, blow off top could be pretty high. And if the blow off top does get near 200K, I don't think we would get down to 32K on a dump. At that point, I would raise the target a little bit higher than that. I still think like somewhere between a 65 to 70, 75% drop on a hard landing, especially if this recession plays out over a long period of time, is likely. I do. You might say 75% is too aggressive, and maybe it is, because Bitcoin's more capitalized now. You got ETFs. So yeah, maybe it's a little too aggressive, but I think it will outdo the stock market, whatever the stock market dump looks like. And I have a hard time thinking the stock market would only dump 35%. I think it would dump more than that, probably. Like, what if we kind of follow something kind of like .com, where the bleed out is just a lot slower than what we think it's going to be? That was a brutal bear market for the stock market, and we sort of have like an AI tech bubble going on right now. So, look, if you try to predict a recession, it's going to drive you absolutely mad, drive you crazy. It's kind of a foolish thing to even try to do. This is just more brainstorming and thinking about maybe taking profits a little more aggressively because of the risky environment that we're in. And that's kind of the point. It's like to have a profit taking strategy for when you feel like Bitcoin is getting pretty overvalued, your altcoins are getting pretty overvalued, is dangerous to assume that Bitcoin has to rally back yet again later in the year and put in a huge top. It doesn't have to. It could simply top out in February and that could be it, and we could be in a bear market until sometime in 2026, which would kind of be a reasonable base case, right? You get your hard landing and then you get just some time-based capitulation that goes along with it. Because the stock market, like if we go back to the stock market, right, we can see that what happens after a bear market, and they do tend to last for a little while, right? So, like if we go back to the GFC, as an example of a bear market that didn't play out right away. It started, really started to roll over in October of '07, and it didn't finish and print a bottom until like a year and a half later. Now, this was a particularly nasty recession, one of the nastiest that we've seen in probably close to 30 years at that point, or maybe even more than 30 years. Okay, so that might be a little unusual for it to take that long, but maybe not. I mean, look at .com. So .com started in August of 2000, and it didn't end until, I mean, you could say September or October of '02, so about 2 year long bear market with some brutal bounces along the way. And look at the rate cuts, like they were slower than you might expect, right? Like it took longer for these rates to really come down, and I mean the Fed had to actually cut all the way near zero. So we don't know where the Fed's gonna be able to stop. Like they might think they can stop at 3, but what if they have to cut further? What if inflation? Um, yeah, and they're also in a tricky spot. If inflation comes back, they have to raise rates. So then you get a situation like the '70s, right? I'm going to go back to the '70s because we don't know if inflation is going to stay down, the inflation rate, if if they don't come down, if the Fed funds rate, if they're cutting too quickly, right, it could bring inflation back. And so, if you look at the history of the stock market in the '70s, you had your soft landing, but it was really just a series of brutal recessions, right? And like your soft landing situation, January '66, it was over within 9 months. This recession that came just a short while afterwards started around November of '68, or you could say December of '68, and it didn't really truly bottom until May of '70. So that was like a year and a half long recession. January '73 would be the start of this one, and it didn't bottom until September of '74. This is some pretty long recessions. And if you think it can't happen, I think you should think again. I do think a situation like the '70s could happen. Wouldn't play out exactly the same way, but I think it could happen, right? If the Fed is not careful with how they cut rates, the CME group rarely gets it right beyond just maybe the next rate cut. They can't even decide what's going to happen in November. So I think the point is you can see some of the instability that is kind of forming here for Bitcoin and the stock market. Um, there's historical precedent for the stock market to rally into rate cuts, which it is doing. I think Bitcoin could rally maybe into rate cuts as well if it dumps soon and then maybe pumps up, or maybe Bitcoin waits until quarter 4 to start rallying and absorb some of that excess liquidity from the stock market as the market perceives things as sort of being risk on again. You have to treat every single rate cut cycle differently. You can't treat any two of them exactly the same. But we can learn from history, and I think what history shows us is we need an exit. We need an exit strategy, and we need to think about potentially exiting the market in quarter 2 of 2025 if things seem like they're going south at that time. If and here's the thing: the tricky thing about it is that what you want to kind of see, in my opinion, not financial advice, by the way, none of this is financial advice, is the market just getting a little overheated too quickly and things seeming a little too good to be true, and people talking about how we're going, we've avoided a recession. Maybe we get a soft landing or something. You hear the soft landing talk coming. Maybe if the stock market rolls over a little bit. I think at that point you have to go on the side of history and just say a soft landing has only happened once, and even when it did happen, it was brutal. And I feel like our market has already kind of had a soft landing. So, and you might be like, what? What are you talking about? Well, case in point, what we just went through here. Like this bear market, for me, if you go back to the stock market too and just look at it, I mean, Bitcoin, what's a soft landing for Bitcoin, right? If you go back to the stock market, this kind of takes on a similar shape, in my opinion, in 2022 to 1966, right? So if we go back to 1966, don't worry, I'll auto fit this on the screen. You look at kind of that bear market that happened. Look at that fractal. It does look a little like 2022. So we could see something like this happen on this next recession. So like this recession here, December '68 to May of '70. So we could get like a year and a half long bear market. It could happen for the stock market, right? It's happened before. It could happen again. I don't think we're looking at I don't think we're looking at COVID. So I think this bull market could extend, and I don't have any price targets for the S&P. I don't really analyze it that closely. Well, let's say the S&P could get up to like close to 8,000 maybe. I don't know if it would do that by quarter 2, probably not. Let's even say 7,000 or 6,000, right? That's probably more reasonable. and then start to roll over. Um, it could be a year and a half, right? It could be sometime in 2026, late 2026, that the stock market finds a bottom, and it could double bottom maybe, or put in a slightly lower low from what it did here, right? It could, like, I'll draw a path, right, of what the stock market could potentially do. It could rally into 2025, maybe into February. Let's just say, like, I don't know, let's say 6,000. Okay, great, congratulations. Stock market got to 6,000, and we can start to see that staircasing pattern of just down, a little rally up, down. And what if the Fed delays their rate cuts? And what if they cut more than what people think, right? Like they usually do. The Fed thinks they can achieve a soft landing, but what if they don't? And what if you get this, like, waterfall at the end, and the stock market actually puts in a lower low sometime in 2026? This would sort of mimic what happened in the 70s, where you have this recessionary decade, and maybe they got to raise rates at some point too. This may not all be on cutting. Some of this might be raising because inflation's coming back, and inflation's coming back. Stock market's not going to like that either. So you have to consider those two possibilities. And if the stock market's getting affected like this, you think Bitcoin's going to do anything exciting during this time? I don't think so. I think Bitcoin will roll over right with the stock market. It might bottom before the stock market, but I just don't think Bitcoin's going to have a great year if this kind of situation plays out. So you have to prepare by being ready to take profits. Do not take this next bull run for granted if it occurs with Bitcoin, as I think it will in Q4 and even into Q1. Don't take it for granted that we got to have another leg later on where Bitcoin goes on to 200, 270K or whatever at the end of 2025. It doesn't have to happen like that. In fact, I think it's kind of unlikely to happen, given the past history of rate cut cycles and what they've done to the market. Stock market is pumping into a rate cut cycle. We've seen that when that's happened in the past. It generally doesn't end well when the rate cuts start to become a little more aggressive. When the stock market is dumping into rate cuts and rates are raised, we see a different pattern play out like it did in the 70s. But that's not what's happening now. This is not like the 70s in a sense. It is with inflation, but it's not like the 70s in the sense that the stock market is pumping into rate cuts. Okay, so I'm gonna leave it there, and that's enough analysis of this potential situation. If you like the content, please be sure to give me a like, subscribe to my channel, and join my Snake Pit Telegram group. There's a link to the video in the video description. We have hundreds of people there who are glad to help you with market analysis. I do chart updates, voice notes, and things like that in my Telegram group, and I update that pretty much every single day. So I would encourage you to join. Thank you so much for joining me in Crypto Simulation Theory. And remember, none of this is financial advice. Always do your own research. Predictions are a dime a dozen, and you should look at other analysts and see what they have to say and then make up your own mind. So looking forward to Q4, and I'll see you again next time. Bye.